So in 3.1, you read about types of checking accounts and a little bit about rights and responsibilities and kind of the ins and outs of a checking account. What we're going to talk about is a little bit about the different types, about some of your responsibilities when you have a checking account, and then actually show you how to fill out a deposit slip and an actual check. And then that'll move us into 3.2, which we'll go through setting up what's called a check register, and then how do we make that match up with what the bank sends us as a bank statement, which is called reconciling your bank account. So that's kind of what we're going to be talking about today. Okay? Excuse me. So first of all, actually before we get to that, in your book, one of the things I asked you to pay attention to, not necessarily write down or write it out as vocabulary, but just pay attention to, were the different types of checking accounts that were available. So going back to that for just a minute, what were some differences among the different types of checking accounts?
Is it like single and joint?
Okay, so one of the differences is a matter of who's allowed to have access to it. If you have a joint account, that means more than one person is allowed to withdraw and deposit into that account. For example, Mr. Gordon and I have a joint account in the States. We also have a joint account here. So both of us have the right to withdraw money from that account. Both of us have the right to deposit money into that account. Strangely, in El Salvador, when we set up, they wouldn't allow us to have a joint account, which was kind of weird. But usually that's an option. It does not necessarily have to be a spouse. It can really be anyone that you give the okay to and has signed a check card. So there's a signature card that's part of signing up for a checking account. And any person who has the right to make transactions on that account has to sign this card. Partly as kind of like signing a contract that says, you'll always make sure you have enough money in your account to cover what you're trying to pay for. But it's also to compare your signature on an actual check. So if it comes through, they know you're the one who actually wrote it, and they can compare signatures to your signature card. So in the States, for example, one of our checking accounts is not only Mr. Gordon and myself, but it's also my mother-in-law and my brother-in-law, because my mother-in-law has our power of attorney, which means she sort of has the right to sign things for us, legal kinds of documents for us, since we're not there. And her signature is as good as our signature being on it. So she's on one of our accounts, and then my brother-in-law actually pays our bills for us while we're gone. So if bills come in, he pays that, so obviously we just put him on our account. He can just write checks right out of our checking account to pay for our bills for us. So it doesn't matter who the other people are as long as they have the okay and they've signed the signature card. Other differences? Sorry? Interest, yeah. Some checking accounts will earn you some interest on your balance if you've got money in the account. Others do not. Although accounts that earn you interest also have a particular qualification. Anybody remember what that was? Yep, so in order to have an account that you can earn money on, there's usually a minimum amount that has to stay in that account. And it's usually a fairly large amount. So generally speaking, the interest earning accounts are for people who have a lot of money. Because there's usually like a couple $1,000 minimum, certainly a couple $100 that you have to keep in the account in order to keep earning interest. Whereas most just basic checking accounts, you do not earn interest. You can earn interest on savings accounts, which we'll talk about next class, but usually checking accounts do not. Okay. Any other differences that you noticed? Sorry? Okay, so how is that different than some of the other ones? Yeah, and you'll notice that even though this is a relatively new book, as fast as technology changes, you'll notice that there's even some things that are a little bit out of date in this book. For example, express checking accounts, almost every checking account now, no matter how complex or how basic it is, you can access by internet. You can sign up for a password and you can access your account through the bank's website. A lot of times you can write electronic checks that way. You can transfer money from your checking to your savings or savings to checking, things like that, all online. So that's pretty standard anymore, whereas a couple of years ago when this book was written, that was kind of a special feature that you could get. Some accounts may differ as to how much you can do online. So you may have a basic account where really all you can do is like transfer from savings to checking and back again, whereas other accounts maybe will allow you to write electronic checks and things like that more. So there may be some differences as to what you can do online, but pretty much everything can be accessed online to some degree anymore. Anything else you noticed? I think one other difference that you need to be aware of, because this is probably the one that will affect you the most when you go to sign up for a checking account yourself, if you don't have one already, is whether you have any fees or not. Some accounts will charge you different processing fees and different maintenance kinds of fees, whereas other accounts are free. I believe at this point every bank has to have a free checking option, but sometimes those are the really, really basic accounts and there's not a whole lot of benefits to those or different, bells and whistles that you can do with those. But every checking or every banking institution is supposed to have a free checking option. If you want more benefits, or if you want things like overdraft protection or things like that, then those are going to cost you, and that's where the fees come in. Okay, so you want to be aware of those when you sign up for a checking account yourself, that you know what kinds of fees you're going to be paying for. Sometimes it's a per check fee. For every check you write, they'll charge you something. Sometimes it's just a general monthly fee. You need to be aware of that so you know what you're going to get charged. Okay, so based on what you read about checking accounts, what would you say are some responsibilities that you have if you have a checking account? Yeah, you need to know what's in your account, and you need to make sure that you have enough for whatever your withdrawals are. If you try to take out more money than what you have, whether it's by writing a check, buying something, taking out money at an ATM, whatever the case might be, if you're trying to take out more than what you have, excuse me, then that's called an overdraft, or you overdraw your account, something like that. Most banks will cover an overdraft of a small amount, even if you don't necessarily have overdraft protection. If you have overdraft protection, then you won't get charged additionally for having an overdraft. If you don't have the overdraft protection, then every time you try to take out more than you have, you'll get charged for it. There'll be a fee along with the fact that you have to put the money back in to cover it. If the amount is particularly large, the bank won't cover it. So if you're like $5 over, the bank will usually just like cover it, and then you have to put in a deposit, and they'll probably charge you a little something for going over. If it's like 500 over, the bank's going to go, no, sorry. They stamp your check with an insufficient funds stamp, and they send it back to whoever it was that you thought you were paying. And so now that person's not actually getting paid. So now they'll come back to you and get the money from you some other way, usually charge you some sort of penalty or fee because of having to go through that process of chasing the money down. And so it can get pretty messy and pretty complicated if all of that happens. So a big responsibility is knowing how much you have in your account and knowing that whatever you're trying to withdraw, whether it's through just an ATM kind of thing or through making a purchase, that you actually have enough money to cover that. Okay, do you have a question, Alfred?
Should we be taking notes on stuff?
This is the lesson, so that would be a good idea. Any other responsibilities that you noticed as you read? Yeah, keep track of your debit card, keep track of your checkbook, those kinds of things that are ways to access your checking account. Again, one of the reasons that you sign that signature card when you sign up for the account is so the bank can compare the signature on a check to the signature on the card and make sure you are the one who actually wrote that check. But I have to be honest with you, U.S. banks are not particularly careful about that. And I didn't realize how not so careful they were until we went to some other countries like Brazil and El Salvador, where they are extremely picky. Like to the point of there were a couple of times where Mr. Gordon really did write and sign the check, and they got it at the bank and said, nope, your signature doesn't match close enough. And so they sent the check back and said, we're not going to pay it. So then we had the hassle of having to go back and try to get it paid and everything else. And part of the reason is because, I don't know if any of you have had Mr. Gordon for class or ever had him sign anything for you, but he has one of these kinds of signatures. Like you can't actually read it. It's really hard to decipher that there's any actual letters there. And so from time to time, it'll change just a little bit when he signs things. And both El Salvador and Brazil, we had issues where it got to the bank and they went, nope, not close enough. It doesn't look like what you signed on this card, so we're sending the check back. We're not paying it. So the U.S. is not nearly that picky about signatures, but theoretically, they're supposed to be checking to see that what you write for a check really is you. However, because they're not so picky, if you lose track of a checkbook, somebody could try to access your funds by writing a check and trying to pass off your signature. Same thing with debit cards. Debit cards are even just a little bit easier in some ways, especially if they can get a hold of your PIN number somehow. So if you lose your debit card, you need to report it to your bank right away so that they can stop that debit card and not allow anyone else to try to access your funds through it that aren't supposed to. And even just keeping track of your PIN number and not sharing it with anyone. No matter how in love you are with your boyfriend or girlfriend, unless you've been married for 20 years, like, old married people, and you're pretty sure it's going to last, like, you cannot share your PIN card, your PIN number. And if something were to happen where you feel like that's been compromised, again, go to your bank immediately, change your PIN number, just to make sure nobody's getting into your account that shouldn't be getting into your account. Someone asked last class whether I shared my account or my PIN number with Mr. Gordon. We have an account in the States that, yes, we do use the same PIN number. But our account here, they're different because his is some weird random thing and I can't ever remember it. So I had to change mine to something I could remember. So here we actually have different PIN numbers for accessing through ATMs or whatever. And you can do that on joint accounts. You can each have your own PIN number. It doesn't have to be the same thing. We just happen to have the same thing in the States because it's one we both use quite a bit and it's easy. So, all right, let's see here. So what ways can you access your money? Obviously, paper checks. Paper checks are something that probably are not as common anymore, but you still want to have a checkbook and you still want to know how to write a check. Because there are still certain situations where the only way, or at least the easiest way to get something paid is by a paper check. Okay? Probably more common these days are your debit card. You can pay for things with your debit card. You can get money out of ATMs with your debit card. Electronic checks that you just actually do all online through your computer are another way. Even things like PayPal or Alipay here that are tied to your checking account, and then essentially write an electronic check when you buy something. Those are all different ways that you can access. And walking into a bank and taking cash out. But even then, you can't usually just walk into the bank and say, hey, I'm Schaefer Wilson, I'd like some money out of my account, please. They're going to go, yeah, that's great. Show us some ID. Or usually what you do is you go in with your checkbook and you actually write yourself a check. That way they know that it's still all legit. It really is your account. They've got your account number right there on the check. And then you can get cash that way. Okay. Again, overdraft protection is something you usually have a choice about. It's not something you have to get. So whether you get it or not is kind of up to you and your own personality and your own level of carefulness when it comes to knowing how much money is in your account. If you are someone who's not very careful, then it may be worth the money you have to spend for this protection. It's kind of like insurance that you would just pay as a fee every month so that any time you did overdraw your account, the bank would cover it and then you would just have to replenish those funds. If you're someone who's more careful and you have a good idea of what's in your account most of the time and you're not going to be writing checks that are for more than what you have, then it may not be worth that monthly fee to pay for the protection because you don't really need it. So it's usually something you pay for extra, and whether you need it or not really is just a matter of your own personality and comfort level.
What's the most that you can go over?
I don't really know for sure. I know from my own personal experience when I was in college and, checks were still the way to get money. I was not very careful. I was one of those on the not so careful side. But I don't remember having this kind of protection either. Like they just charged you every time it happened. I can remember probably having up to about $30 that the bank would just cover.
Yeah.
So I would say probably up to about $50 they would probably just cover it for you as long as you didn't do it very often and you always kind of got the money back in within a day or so.
So the amount
If you start getting up into the hundreds, they're probably not going to cover it. They're just going to return the check and then you got to deal with all the
is it also
repercussions
based on
from
your
that.
credibility with them?
Possibly, yeah. So it could be like, if this is, you do this once a year, like they're probably more likely to cover it than if this is happening every week, that kind of thing.
Okay. Thank you.
Okay. All right, so the check register. The next question says, why is it important to use one? The check register looks something like what you see on the back side of your worksheet. So when you sign up for a checking account, they're going to send you a box of checks. Okay? And in there, you're going to have check books, which are usually about, I think, 20 checks to a book. So you get about 4 or 5 different books in a box. Each book is going to have these 20 checks to it. And then at the bottom of, or the end of that book, they're going to have some extra white slips that are deposit slips. So that one book is going to have both your checks and your deposit slips in it. And then along with your checkbooks in that box is going to be this other separate book. And it looks like a checkbook this way, and you open it like this, right? Kind of like that. And so what you see then in this book is this. This is how it's set up. The purpose of this is to keep track of your transactions. So anything that withdraws money out of your account, anything that puts money back into your account, keeping track of all of that in one organized place so that you do have an idea of how much money is in your account at any given time. And so they call this a check register. Okay, because this is where you're going to write down, register all of the transactions that you make. Okay. Unfortunately, in this day of electronics and being able to access your account online and everything else, the check register has kind of gotten thrown to the side. If you ask most people these days, they would probably tell you they don't keep one anymore. Back in the day when I was younger and really paper checks were your only way of paying for things outside of cash, this was a much bigger deal because you didn't have the online that you could just go to anytime you wanted to and check things out. But I still think this is important, and I'm still going to show you how to fill one out and how to use it, because even with your online banking, banks can make mistakes. Sometimes they charge you a fee that you're not supposed to get charged. Sometimes the person who's processing the checks, maybe they transpose a number. And so it's a check that was meant to be for $150, but they type it in as $510. You know, just little things like that. Mistakes can happen. And if you don't have any idea what you should have in your account, and you are just completely relying on whatever the bank says every time you log into your account online, you could get ripped off. So it's a good idea to still keep track yourself of what you think the money going in and the money coming out of your account should be, and what you think your balance should be. So if there is a discrepancy with the bank, then you know that you need to follow up with them and get it corrected. Okay? So even though it may not be the most popular thing to do anymore, I do think it is still important that somehow, whether it's with the thing that comes in your box of checks or whether it's your own, set up on a spreadsheet or whatever, but somehow you're still keeping track of your account on your own, separate from what the bank says. And then you reconcile with the bank, which is what our second lesson's about. How do you take what you've got and what the bank says and make sure that it matches up? Okay? All right, so here's a problem, an example problem. We have this person, Allison, who currently has a balance of $2,300 in her checking account. She gets 3 checks that she wants to deposit into her account. She's got a paycheck for $425.33. She's got a rebate check of $20. And she's got a personal check from somebody for $550. So I'm just gonna write this over here for a second. Paycheck of $425.33. Rebate check of $20, and a personal check of $550. Oops. Okay. Now, she also wants to get $200 of cash back from this. So she's basically going into the bank with these 3 little pieces of paper that say that they're worth so much money, but she needs some actual cash. So she also wants to receive $200 in cash when she makes this deposit. Okay? So it's kind of like saying, I'm going to go to the bank, I'm going to put this money into the bank, and instead of then walking out the door and walking around the corner to the ATM machine to take my $200 out, I can just take care of it all at once when I make my deposit. Okay, if I'm going to be standing there at the teller anyway, I'm going to give her money, she's going to give me a little back, and she's going to put the rest in my checking account. Okay, so that's the situation here. Now, the question here asks us, how much is she going to have in her account when it's all done? Okay, so let's answer that question first.
This is good.
Mm-hmm.
What's rebate?
A rebate is, let's say you go into a store and it says that something actually costs $52, but there's a rebate of $20. So you still pay the $52, but then you get usually some sort of form when you go through the checkout line. And if you send in that form with the barcode, proof of purchase, right? Then the company will send you $20 back as a rebate.
Okay.
It's a lot of places anymore because it was kind of a bit of a scam, and I'll explain why in just a minute. But a lot of places anymore, if you go in, sometimes you'll see instant rebate, which means you actually only pay $32 right then and there. Like they'll take the $20 off. So instead of it's not the store that's giving you the $20 off, it's that particular company of that item that's giving you the $20 off. But they've gotten to the point now where a lot of times they'll make it an instant rebate. So it's not the store that put it on sale, it's the company that says you pay $20 left and we'll take care of the other $20 with the store kind of thing. But it used to be more common a few years ago where you actually had to have mail-in rebates. And what the companies are kind of hoping for is that you'll buy the item because you get a rebate, but then you go home and you never actually send it in to get the money back. So you've still paid the full $52 and you're never going to get the $20 back, which is kind of what they're hoping for. So that's kind of the scam part of it, but I think people were getting upset with that. So now you see more of the instant rebates in stores, but it's more coming from the manufacturer, not from the store. Okay. All right, so figure this out. If she started with $2,300, she's putting these 3 checks in, but she wants to walk out with $200 from that. What is her account balance going to be after all that happens?
Can I put something?
Mhm.
So basically, she's putting all 3 checks. So paycheck, rebate, and personal, and then after when she's done, she's taking $200.
Basically.
Okay.
Yep. How much is it?
$3,095.
3,095. 0.33. Everybody agree with that? That's what she should end up? Alright, let's double check here. So if you add up her 3 checks, that's a total of $995.33. But then you're taking $200 out of that. And so the amount that's left to actually go into her account is going to be $795.33, right? So then when you add that to her $2,300 that she had, she should end up with the $3,095.33. Okay? Now, the next thing I want you to do is to actually fill out a deposit slip for this situation. Okay, or at least I want to walk through it with you on how to do this. So this is what a deposit slip usually looks like. It's very similar to this. Down here, you have your account number and a routing number. So the routing number is what tells different institutions which bank to send this check back to. Okay, so if I buy something at Best Buy will take the checks to their bank. That bank will process it, put that money into Best Buy's account, but then the checks themselves get sent to your bank so that your bank can then take the amount out of your account. Okay, so a routing number is what helps institutions know where these checks need to go, get them sent out. The account number then says, once it gets to your bank, here's the account to take it out of. So they're not looking up Alfred Adams every time. They're finding your number and taking the money out of your account. Okay? So you always get that printed down here. All of your deposit slips, all of your checks will have that set of numbers down here at the bottom. Okay? Once you have signed up for a checking account and they have sent you your box of checks, so sometimes you'll walk out with a temporary box of checks, or I should say a book. They won't give you a whole box. But you'll get a temporary checkbook. It will look like this. There'll be nothing up here and you'll have to fill out your name and your address in that space. But once they have sent you your first box, this will already be filled out with the number that you put in your application materials. Okay? So it would already say, what was her name? Allison. I'll call her Allison Smith. And it would have her address up here. Something like that. So that would already be printed on all of your checks and all of your deposit slips. Okay? But when you get that first initial book to get you by until the box shows up, you have to write that in yourself. Okay? You need to fill in your date. So let's just use today's date, which is January 11th, 2016. And then what does it say under this next line? If
Required.
sign here for cash received if required. What that means is you don't always have to sign that line. Okay? Generally, you only sign here if you are then trying to take cash out of what you're trying to deposit. So if all you're doing is going to the bank and taking your checks and depositing them, there's not really any way to fraud anybody with that, because it's going to go into this checking account, whether that's yours or not. Right? So even if I got a hold of Alton's checkbook and tried to deposit money, if I use his deposit slip, it's going in his account, right? There's no way I'm getting it in my account. But if I go in to try to make a deposit and then say, but I would like some money back, please, now it's possible that I could be taking money that really belongs to Alton but I'm taking it for myself because I'm getting cash from it before it actually goes through the whole process and gets cleared. And so that's when they need the signature as sort of a way of proving that you are who you say you are and that your signature is going to match that card you signed. So you don't always have to sign this. Would we need to sign it in this case? Yes, because we are trying to get cash back. So whether you sign it as you or pretend to be her or whatever you want to do. But yes, this should be signed in this case. Okay? Now, for the actual money amounts over here, where it says cash here on the first line is if you have any cash for deposit. So for some reason I end up with $1,000 all in 20s sitting around my house, and I don't want it sitting around my house anymore. So I decide to take it to the bank and deposit it in my account. That amount goes here for cash. So this first line for cash is if you want to deposit cash. The cash that we're going to take out goes out down here. The less cash received line is the amount of any cash that you want back. Okay, so keep that straight, which cash is which. We don't have any cash that we're putting in at this point, so we're just going to leave that blank, or you can draw lines in it like that to show that, nope, I don't have any cash. Then the next thing that you've got here is a place for checks. And notice it says list checks singly. So even though she's got 3 different checks that add up to $995.33, we do not just write $995.33 here as a total. We need to list each check separately. And usually what you write over here in the space is who the check was from, who signed it. So let's say she works at McDonald's, okay? The first thing she would write here for her paycheck is not paycheck, but she would write McDonald's because that's who basically signed the paycheck for her. Okay? And then the amount of $425.33. The next one was a rebate check. So let's say she got that from General Electric. No, that's too big. Bose. She bought a Bose stereo and she got a $20 rebate. Okay? So I'd write Bose there. That's who I got the rebate check from, and the $20 for that.
Even if it's like zero cents, you still pay it.
Yeah, usually. Yeah. And then the personal check, let's say the personal check came from her mother to help her with her rent for that month, and her mother's name is Betty. Okay? So the personal check has come from Betty Smith for $550. Okay, so that's what you would list there for each check, is who's signed it, who you're getting the check from. Then the next line is a subtotal line. So this is where you add up everything that you're wanting to deposit. So in this case, we end up with that $995.33 amount. But then, since Allison wants to walk out with $200 cash in her hand, we now put the 200 in this line for the less cash received. So less meaning subtract the cash received. How much cash did I get out of this that's not going into my account? So my total here is going to be the $795.33. That's the amount that actually should get added to the account with this number. Make sense? Any Questions on filling that out? Now, if you happen to go to your bank at 2 o'clock in the afternoon to make this deposit, and then go down the street to Best Buy and buy something at 2:30, this money may not be in your account yet. It usually takes a little bit of time for it to all get processed and actually be in your account and available to be used. Usually, I'd say in the States anyway, it takes about a half a day. So if you were to go in at 9 o'clock in the morning and made your deposit, by 2:30 in the afternoon, it's probably there. It's probably available. But if you make your deposit at 2 o'clock in the afternoon, it's probably not going to really be available in your account till the next morning. Okay? And sometimes on an ATM machine, if you're checking your account balance, and let's say you made the deposit at 2 o'clock, and then you go to an ATM at 2:30 and you check your balance, you're probably going to see two different entries. One is like available balance, and the other one is like pending balance. So your available balance would be without the $7.95 added in. It's whatever you can actually take money out of. But then your pending balance would be the new balance with the $7.95 added in. So it's showing you that, yeah, this is what your new balance is going to be. It's just not really quite that yet. Okay, it's pending everything clearing and being okay. Okay, makes sense? Questions? All right. All right, you don't necessarily need to write this one all out, but I just want to show you an example quick of what a check register kind of looks like, and then you're actually going to get a chance to fill one out yourself. So in this example, it says Nick has a checking account with the Park Slope Savings Bank. He writes both paper and electronic checks. For each transaction, Nick enters the necessary information. So you'll notice even on your sheet, there are different columns. And what's at the top of each column gives you an indication of what you need to write there. So your first column will say something like number or code. If you're actually writing a check, and you can see this on the blank fake checks there on your worksheet, up in the upper right-hand corner, your checks will have a number to them. And the number will just go sequentially through a checkbook. So usually, maybe it's 25 in a book, because it's usually starts at like 100 to 124, and then the next checkbook will start at 125, and it'll go to 149, and so on and so forth. So your checks just number consecutively, but that way you can kind of keep track of which check was for which thing. So if you write a paper check, then the thing to put in this first column is the number of that check. Okay? If you are withdrawing in some way other than a paper check, then it's good to kind of have a code of how you did that. So in this case, Nick is using an E to represent that this was an electronic check. Usually people use a D if you're using your debit card. People will write ATM if you're withdrawing some money out of an ATM machine. But just some sort of indication here that you understand to help you keep track of, how did I make this transaction? Did I write a paper check? Was it an electronic? Did I use my debit card? Was I getting money out of the ATM? What was going on? Okay. Second column is date. Notice it's not a very big column, so usually we just do it by numbers, like 5/5 or 5/10, something like that. The next column is a place for you to give some indication of what your check was about. Now, most check registers look like this, where you have like a white line and then a shaded line. Unfortunately, the shaded part on what I ran off for you didn't come off. So what you see here, each one of these rows should actually be divided in two yet and have a white line and then a light gray line. But the light gray didn't come off, unfortunately. Okay? If you use those two, both of those lines, I think it's probably the most organized way to keep your check register. And what usually happens then is on the first line, you write who you wrote the check to. So in this case, he wrote the check to DeWitt Auto Body. And then usually on the second line, that's where you would put why. Why did I write this check? So instead of putting car repair here in parentheses, people usually put it on the second line for the why. I wrote this check to DeWitt Auto Body for car repair. Okay? They're showing it with it in parentheses. Afterwards, you could do it that way. Also, either way is okay. Then, you'll notice that you have two different kinds of columns here. One column is for payment, and the other column is for deposit. They give you two different columns so that you can keep straight the money coming out and the money going in. If you keep all of that in a single column, it's really easy to accidentally subtract when you should have added or add when you should have subtracted. So by putting them in different columns, it helps to keep that separate and therefore less likely to make a mistake. So any kind of money coming out of your account should go in this column. Any kind of money going into your account should go in this column as a deposit. Okay? And then you have these two tiny little columns in between them. One has a check mark up at the top, and the other one says fee. The one that has a check mark up at the top, we're going to see more in just a minute. But when you take your check register and compare it to what the bank sends you, what you usually do is take the checks that the bank lists and check them off on your register. Yep, I've got that one, and that one was on there, and that one was on there. So they give you a little column to do that, to just make that check that, yeah, this has cleared the bank, this has cleared the bank, this has cleared the bank. And then you also have these fees. We talked about fees that might be on the checking account itself. There are fees sometimes when you use an ATM machine. For example, my account here is Bank of Communications. I think that's the bank. Pretty sure. But if I go to HBC and use their ATM machine, HBC might charge me a fee for using their machine because my card is not one of their cards. And sometimes your own bank will then charge you another fee because you went to someone else's ATM to try to get money out. I don't know if it happens so much overseas, but in the States, that happens a lot. If you have a card through one bank, but you go to a different bank's ATM machine, there is the possibility that you're going to get charged fees by that other bank and possibly fees by your own bank because you used a different bank's ATM. So anytime that you have something in your transactions here that is a fee of some kind, you generally will check it in that column instead. And again, it's just a way to kind of stay organized and know what kinds of fees you're being charged. And if you find that you're getting a lot of fees for ATM, you may want to start finding an ATM machine that's your actual own bank. Or you may want to change banks because your bank isn't convenient. Okay, but that's what those two columns are for. And then finally, this last column is where you keep your running balance. So you'll notice here across this top row, all of these different headings, but then you get to the last one and it's blank. And that's because that's where you can take the balance that was at the bottom of the previous page and bring it up and write it in for the top of the next page so you can keep going. All right, so right now, Nick is showing a balance of $3,672.27. Okay, make sense? So this is what a check register will look like when you have it filled in. Okay? Any questions on that? Yeah, go ahead.
So the overall balance is we add all that together.
So the overall balance is that every time I have a number that's in the payment amount, I need to subtract it from my balance, right, to get the new balance. Anytime I have something that's a deposit, then that's when I would add it to get the new balance, okay? Because these are money that's coming out of my account, and this is money that's going into my account. But yeah, you just keep a running total then. So my new balance here would be, what would that be? 27, 3, 7 and 2 is 9, 6 and 7 is 13. Oh, no, now I started adding. Never mind. Let me do it this way. There we go. Oh, just gave me the balance. Sorry, I thought I had a step by step there. But yeah, that's the idea. Is you would subtract this one and get your new balance here for the next one, so that when you subtracted the next one, you'd be ready to get the next balance.
So you always write in how much you subtracted. And
Yeah.
The answer you put on the
Actually, what goes on? Yes, answers go on blue. That's your new balance, and what you're actually adding or subtracting goes on the white. Yep. Okay, and you're going to get a chance to do that here in just a second. So we're going to go ahead and skip ahead because of time, but I do want to take a second just to show you how to actually fill out a check. So going back to this example here, let's take this last payment to Star Cable, and even though it says it's an electronic check in this scenario, let's just use that as an example to write a check. So on 5/10, it was a check to Star Cable Company, and it was for $138.90. Okay? So again, normally once you get your, whoops, that's not what I wanted to do. Yeah, back up. Keep the pen on. Once you get your box of checks, this part will already be filled in. Your name and your address will already be printed on it. Okay, so you don't usually have to fill that part out. What you do need to fill out is your date. So again, we can just use today's date, 01/11/16. And then pay to the order of is a fancy way of saying who are you paying? Who is this check to? Is it a company? Is it a store? Is it a person? Who are you making this payment to? So in this case, we're making the payment to Star Cable Company, and so that's what we write in here. Okay? In the box right here with the $sign in front of it, we write the amount that we want to pay in numbers. So that's where we'll put 138.90. And then underneath that, we have this big long line that ends in the word dollars. This line is where we have to take our numerical amount and write it out in words. And again, the reason for this is to prevent fraud. Okay? If all you had to do was write the number, and let's say somebody at Star Cable Company is maybe not the most honest person in the world, and so they, when nobody looking, are going, yeah, okay. If all you've got to go by is the numbers, the bank is now going to think you're trying to pay Star Cable Company $1,138.90 rather than the $138.90 you were trying to pay them. So in order to prevent that kind of fraud from happening, there's this double check of here's what we write in numbers, and then we back it up with what we write in words. So we actually have to write 138, and then dollars are already here, so we don't have to write the word dollars, but we do have to show the cents. And since the cents is meant to be as what part of dollars, the cents always get written as a fraction out of 100. So 90 cents we would write as 90 over 100. And then usually people will write some sort of a line to fill in any extra space up until the dollars. Again, as a way of not allowing anybody to write something else in there and try to get more money from the check than what's supposed to be. Question? Alfred, did you have a
Oh,
question?
no, it's just before you wrote it, I was
No, not necessarily. Just readable. Okay? So now this gives the bank, if they have any question about what was written here, it gives them sort of a backup safety measure to say, well, in words it says 138.90, so that's what the numbers is, that's what we're going to pay. Okay? And then you've got two more lines here at the bottom. This one has 4 in front of it. So again, it's a place where you could write down what you were writing the check for. So maybe this is internet through your cable company. So you could just write that there. Okay. Excuse me. Depending on the type of checking account you have, sometimes when you get your bank statement, you will also get your canceled checks back. So once it's made it through the whole process and gotten back to your bank and been paid on it, they'll stamp it and say that it's canceled. And then you'll actually get the checks themselves back. And so if that's the case, this is a good way to kind of keep track of what your checks are for, is by writing a little, what are these called? It's not a comment, it's a, I can't think of the word for it right now. But writing a little note here that says, this is what I was writing this check for. If your bank is not going to send you these checks back, then again, on your check register is a good place to keep track of. This is for the internet, this is for car repair, this is for whatever. And especially when you do things like budgeting, to know why you're writing checks to certain people, especially when it's not obvious. Like if you have a check to John Doe, why was I writing a check to John Doe? Was it for a personal thing? Was it for, services that he's, he came and repaired my air conditioning for me? Like, why was I writing that check to John Doe? So it's good to keep track of that kind of stuff. And last but not least, this final line here that has nothing labeled on it, that's where you sign it. And then again, if the bank has any question, they'll compare it to the signature on your signature card to make sure it really is you. Okay? Now, what happens if I start writing out this check and somehow along the way I totally botch it? Like it's just not fixable. I totally mess it up. What should you do? Write a new one, but what should I do with this one?
Shred it.
Shred it and void it. So even if you're going to send it through a shredder and make it 1,000 different little pieces, you should still write in big letters across the front of it, V-O-I-D, void. And then whether you shred it or rip it up or whatever, that way even if someone gets the pieces and manages to put them all back together, it's still not worth anything because it has this big void written across the front of it. And then on your check register, you also want to record that this number check ended up being a void. So there's no money amount to it, but you're just recording the fact that that number was voided So when you go back, 3 weeks later and you're trying to do your reconciling and you're going through your check numbers and you're like, wait a second, where's 1246? Did I forget to write that down? Oh crap, did I forget to write down a check? How much was that check for? No. That check was voided. So it's just keeping a record of the fact that that check was not worth any amount. It just got voided. Don't worry about it. Okay? But always write the word void across the front of it first before you tear it up or shred it or whatever. That way it's not going to be worth anything. Okay? Okay, so here's your chance to try it. You've got your check register on the back side. I am telling you the starting balance that you have, and then I'm giving you 9 different transactions that I want you to record. Oh, come on. There we go. I want you to record on that check register. Okay? And then when you're all done, we're going to see if everyone's coming up with the correct new account balance. And then we're going to use this when we get to our example about reconciling, taking our check register and matching it up with what the bank says. Okay, so take a few minutes right now to write this up on your check register, and then we'll use that in just a minute for an additional column.
Do we have to divide up the boxes even more, or?
You don't necessarily have to draw the line to divide it up, but I would suggest you just kind of set it up with that 2-line approach of here's who I wrote it to and here's what for, as much as you can, and just kind of practice that. You don't have to necessarily draw the line itself. If that helps you, that's fine. Yep, very first spot is where the check number goes. Yep.
Your payment. The payment is 130. You take it out because it's a loan. Because your bond is right there.
So if you deposit here, What description do you write for positive? You write it here. So what do you write? Positive. Okay.
Are we close? So I'll show you one more thing before we're done. So. All right, even if you're not quite done, go ahead and open up your textbook to page 129. If you don't have your own, just look on with somebody that's nearby. Okay, so on page 129, at the very bottom of the page with the blue ink, that's what your check register should look like. Okay, so you're starting out with check 1500. I didn't specifically tell you the check numbers beyond that, but you should just assume that you're going one by one after that to fill in your check numbers. The deposit, notice, does not have a check number because it's not a check, right? You're putting money in, so that's not going to have anything out there in that first column. You're still going to have the dates for it, obviously, but then you'll just write it down as being a deposit, so you'll know what kind of a transaction it is based on your description, not so much on that code or that number. And notice that the deposits, those two deposits, are over in the second of the columns for deposits. They're not included in that first column where all the rest of your checks were. Okay, so we end up with a balance of $1,827.63. That sound about right for all of you who got through it? Sound okay? All right, so now look right above it. Right above it, you have something that would be similar for just about any kind of paper bank statement that would be sent out to you. And probably even if you get your bank statements electronically, it's going to look pretty similar to this. Okay, so let's just kind of take a look at what kind of information they're giving you. Again, up in the upper left-hand corner, you've got the name and address, just like it would be on your checks and on your deposit slips. In the upper right-hand corner, you have an account number, and then you have the statement period. Statements generally tend to be monthly, but they don't always necessarily go from the first to the first. So sometimes a statement might go from the 15th to the 15th or something like that. So you're going to see the dates that are being included on your bank statement in terms of what has been processed at the bank. So anything that was processed from December 1st to December 31st is what's listed here. So then you've got a starting balance of $1,685.91. That would have come from your ending balance on the previous statement. Okay, so you've got that. And then it'll go through and it will describe and list anything that was processed at the bank during that month. So notice that the first column is date, second column gives you a description, and it's either W/D or it's deposit. W/D stands for withdrawal/debit. So pretty much it means anything coming out of your account. Okay? And then notice you've got check number there. So for paper checks, About the only way you have of identifying which check is which is again by that check number. Because there's nothing on this statement that says who you wrote it for or what you wrote it for. And actually, if you even look at that first one, that 1502 check number, on your check register, what's the date for when you wrote it? December 2nd. But what's the date on this bank statement for 1502?
December 8th.
December 8th. So you can't even rely on the dates for paper checks because the date you write down is the date you wrote it. The date that's on your statement is the date that it hit the bank and got processed. So really the only way you can match up your statement and your register with paper checks is based on the check number that you have. Now with electronic checks or debits or ATM withdrawals, those don't have check numbers. But those also happen electronically, so you can usually rely on the date a little bit better. And if it's not the exact date, it's usually the next day. So if you go to the ATM machine at 9 o'clock at night to get some money so you can make a Family Mart run, probably that's not going to hit your bank until the next day. But usually within a day or two of the date, you're okay. So you can usually match those up by date. But these checks, it all depends on how quickly it gets sent to their bank, how quickly their bank sends it to your bank, and then how quickly it gets processed. And you'll notice that the listing of your checks does not necessarily happen in the order you wrote them. Okay, so to go transaction by transaction with your balance over there on the far right, it's not going to match up with what you have written transaction by transaction. So what you're more interested in when you're trying to reconcile the statement with your register is the totals. Where does the bank say I should end up? Where does my register say I should end up? And do they actually match? Well, at the moment, they don't. The bank says 1809.63. I ended up with 1827.63. Why is that? Because there's certain things that I have on my register that have not come through the bank yet. They're not on my statement. So how do we make this all work? Well, the first thing you do is you look at your statement and you look at your register and you check everything that's on the statement. So remember that little column I said had the check mark on it? So you now go through and you put a check mark beside 1502, and you put a check mark beside 1501, and a check mark beside 1504 and 1503 and 1506, because those are checks that have actually cleared the bank now. You also put a check by the deposit that you made on December 15th, because that has cleared the bank. Okay, so go through and do that quick right now. Check those things off because that's what's on your statement. Okay? Now, take a look at what's not checked off. Those are the things that are called outstanding. So outstanding in bank terms does not mean, woohoo, that's really great. Outstanding in bank terms means these are the things that have not made it to the bank yet and are not on your bank statement. Okay? So you have outstanding. What in the heck? Come back. Come back. What's going on? Come on, work for me. Work. I don't have time. That was really weird. Let's try that again. Let's try this one. So we have outstanding withdrawals. and we have outstanding deposits. What are the outstanding withdrawals? Which ones have not made it on your bank statement yet? The Girl Scout cookies. How much was that for? $32. Anything else? Your what? Flashcard wasn't on there?
No, it's the donation. Yeah, the donation.
Yeah, I think it's the donation, the Red Cross. And how much was that?
$100.
$100. Anything else? The what? Withdrawals.
Oh.
Okay? So our total of outstanding withdrawals is $132. Okay? Outstanding deposits. Are there any deposits that have not shown up on your bank statement yet? Yeah, that one at the end, right? How much was that? $150. And that happened on January 5th, right? So because my bank statement only went from the 1st to the 31st, the deposit I made on the 5th is not on the bank statement yet, but it's on my check register. Okay, so that's affecting my overall balance. All right, so here's what you do to reconcile them. Take the balance that your bank says, 1809.63. And give me 2 seconds. I know the bell's ringing, but give me 2 seconds. Okay? 1809.63. Right? This is what the bank says. But the bank does not have these withdrawals yet. So I need to subtract those from what the bank thinks I've got. Okay? So there's 1677.63. Okay? And then I've got this one deposit that the bank doesn't know I have. So I need to add that one in. So now we've got 367,281, 1827.63. Does that now match with your check register?
Yeah.
Yes. So that's what you do to reconcile. You take what the bank says, you adjust by the outstanding stuff, and you see if it matches what you say. And if all that matches up, then everything's good to go. You've reconciled. Okay? All right.